Good morning friends, today it's 11th of April 2025 and the technical outlook for Nifty and Bank Nifty for intraday and short-term time frame along with the global market analysis is as follows. So in last couple of sessions we have seen that global indices and stocks have surged after a clause of 90 days pause announced by Mr. Trump for most countries, followed by a fresh selling pressure at a higher levels in yesterday's session. Gift Nifty too witnessed a decent up move yesterday since our markets were closed, and Gift Nifty made a high of 23,270 before slipping down back to 22,715 odd levels, that is 550 points from highs. Last session closing of for Nifty 50 index was 22,400 and today we are expecting a gap up opening at around 22,900 plus levels, that is around over and above 500 points on, and that is backed by the news that US has suspended additional 26% tariff on India till July 9, along with other positive cues from the global market. So that gap up opening is expected today. Now the question is whether we are going to hold up the gap up or we can also witness a profit taking ahead at a high levels. So for that we have to look a broader outlook. We have been saying since last few weeks that this tariff war which has started and has initially spooked the global market is not going to end soon. We have seen foreign outflows from Indian stock market since long now, and as per the NSDL, the net outflow and FPI outflow for this month April so far is around $1.2 billion. Thus FIs continues selling in the Indian stock market. If you see there are some positives also which can benefit our Indian market and economy in mid to long term time frame, like stability in the Indian currencies now, falling of the crude prices which can boost the forex reserves also. RBI announcement of 9th April has been on a positive side in respect with the inflation targets and other parameters. If we talk about dollar index, it's on the verge of the breakdown of last 3 years support of $100 levels and can drift down lower towards $95 and $90 in month to come. So we have been negative on dollar index below 108 levels since last few months now, and we were expecting it to retest the lows of 100 followed by lower $95. So we continue to hold the same outlook. US 10 years bond have bounced back sharply in last few sessions, so it's giving a mixed cues. COMEX gold has reached to a new highs of $30 to $40, that is up 20% this year, and we are expecting to test the highs of $3,500 and maybe higher, trading over and above 3,000 mark. Crude prices have also crashed down to multi-month lows. So coming back to Nifty 50 index, this year it is currently down 5.5%, and as we can see high volatility in last few sessions, we can expect the same going forward with buy on dip outlook over and above 22,200 levels with a resistance at around 23,200 23,500 zone. So this is an important level zone, and unless and until Nifty sustains above 23,200 23,500 zones on a weekly time frame at least for a couple of weeks, till then the bias will remain range to down, since 23,200 23,500 will be important level for this series and going forward. Stock specific swings too can continue with a range to positive outlook. We are positive in cement sector, mixed to positive in banking space, and mid cap small cap quality counters to be accumulated has been the view since last few weeks. So overall accumulate quality counters since Indian markets have more positives than negative in mid to long term time frame, and this global turmoil can be a win-win scenario for Indian economy and markets in a long run. Short term volatility can be skipped by being light in leverage positions, but the quality counters should be looked to accumulate on any major dips in days and weeks to come. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.